Oh no! That's what a fellow of mine was saying all day, all week long. After his financial bank fell to the shitter, financial shock wave follows Silicom Bank failure. Oh no! The second biggest bank failure in American history is happening right now in the heart of California tech, Mecca. Oh no! Yeah. Oh, fellow cock, what are you gonna do? What a load of bullshit! Yep, a load of bullshit, fellow cock.
The biggest bank failure in American history is happening right now in our own backyard. It's been a really shocking 48 hours for Silicon Valley Bank, and now the government has taken control of it. So here is how all of this happened. It started late Wednesday when the bank surprised investors saying it needed to raise more than $2 billion in capital to offset losses from bond sales. Well, that caused an all-out panic among the bank's clients, who tried to withdraw $42 billion on Thursday, about a quarter of the bank's total deposits.
No money there. Oh
Shares were
no!
halted altogether this morning, and now the feds have seized control of the lender. Silicon Valley Bank is among the top 20 commercial banks in the entire U.S. The FDIC. Its collapse is a huge deal. It's the biggest bank failure since Washington Mutual way back in 2008. Today, at the Menlo Bank, at the bank's Menlo Park branch, there was a line of about 50 people waiting in the rain, desperately trying to withdraw their money, but that didn't happen. Instead, FDIC representatives told them, come back on Monday and then you can withdraw up to $250,000. SVB says half of all startups that went public last year were their customers. A huge portion of the Bay Area economy is tied up in all of this. Betty, you joining us tonight with more details. I mean, it's hard to overstate what a big deal this is for a lot of companies here in the Bay Area.
That's right. A lot of people are still processing everything that went down in the last few days. Now, startups had millions or even in some cases hundreds of millions of dollars deposited at Silicon Valley Bank, and now nobody's really sure just how much of that cash is left. This is money companies use to pay employees and run their startups. As federal regulators swooped in, startups raced to withdraw cash from Silicon Valley Bank.
One of our amazing investors alerted us, and essentially he said, the bank is imploding. Get out as soon as you can.
Allison Greenberg is the CEO of a maternity care startup. Her co-founder transferred nearly all of their business funds just in time.
$50 he had that bank. Oh no! Oh, $50 he heard.
You can only
Hey,
leave a
life
message.
is working hard for
This is extremely scary for those of us who, pay salaries and put food on the table.
That makes you wonder where's his
Silicon Valley Bank counts on many startups and venture capital firms as clients. During the pandemic, they generated a ton of cash that led to a surge in deposits. SVB bought seemingly safe assets, primarily longer-term securities. Industry expert Shivani Joshi.
The high interest rates that we've seen the Fed install across the economy has a negative effect. It makes the value of their investments worth less. So if customers want to come in, and they're doing it increasingly so to get their deposits out, if they don't have money, they have to sell some of their investments. And that's what Silicon Valley Bank did on Wednesday.
Along with the Fed's hikes, at the same time, clients burned cash and new money slowed. Recently, the bank reported that its assets were running low. The FDIC took over Silicon Valley Bank around noon Friday, but it only insures deposits up to $250,000. And 97% of SVB accounts had more than the insured limit, according to S&P Global Market Intelligence.
Whether or not you have in your account a larger amount than that depends on what happens over the weekend. If the company sells itself and sells its assets for equal or greater than the asset value, there's a better chance you're going to get more than $250K back. If it doesn't, there is a chance that you could have a loss.
San Jose-based Roku held nearly $500 million at SVB, and the company doesn't know if it will recover the funds.
This is not a usual bank. This is not like the mega banks that we have out there. It is not a diversified bank. 50% of the startups in this country are funded through SVB. It is a niche player, and that is why it has found itself in this niche situation.
SVB's failure sent shockwaves across the
Oh, my
banking
God.
system, but analysts say what happened with Silicon Valley Bank is not a systemic issue and not reflective of the overall health of the banking industry.
I mean, still, you can imagine if you have millions of capital tied up there, you're probably very nervous tonight. So we touched on this a little bit, but what do we think is going to happen tomorrow and throughout the weekend?
Well, we'll see if there is a buyer for Silicon Valley Bank's assets or the entire bank itself. The goal would be to complete this by Monday, but we'll see.
We will have to see. Again, a lot of people very nervous tonight. Betty, thank you. SVB is also the main bank for California wineries, according to the San Francisco Chronicle. So that means there are thousands of wineries who don't know when they'll have access to their money, just like all of these other companies and individuals. As you could probably guess, a lot of them exceed the $250,000 deposit insurance by the FDIC, which means it is a waiting game for them.
Oh, could you hear that? Oh, no! Feldman! Buddy bitch from J-Man! Cry you mama! There goes your money! What a bunch of losers flew to your factory, huh? My God, you guys are 65 losers, and now you're my God! Bug! Oh my God, I'm out of my job. Peace out.